The first panel will look at the technology and AI elements that we've been discussing in greater detail. You will have the information on the individual panelists there in front of you. We've got Mattias, who's the Deputy and Acting Head on Digital Finance, Alan Lim, the Director and Head of Financial Infrastructure and Artificial Intelligence Office of the MAS, the Singaporean regulator, Jutaro Kaneko, Deputy Commissioner for International Affairs at the JFSA in Japan, Prag Sharma, the Global Head of Artificial Intelligence of the Artificial Intelligence Center of Excellence at Citibank, Siddhartha, Thimmavajjalla, Executive Director of AI and Machine Learning at Standard Chartered, and I hope he accepts my pronunciation of his surname, and Maria Tasny, the Head of Financial Services, Public Policy and Regulation at Amazon Web Services. So I think a very good and diverse panel. Thank you to all of you for being with us, and let me use this opportunity once more to remind participants that you can participate and ask questions in the Q&A function. But maybe allow me, Prag, to start with you, which is, having worked in this area from an industry perspective for a very long time, how do you see the market evolve when it comes to the adoption of new technologies?
Yeah, thank you very much for having me. Delighted to be here. I'm speaking from Dublin, which is a beautiful day here this morning, which is great. I've had a long career in technology. What's interesting is I have not seen a technology evolve this fast and become this popular this quickly before. So we are at a unique place in time when it comes to technology evolution when compared to the past. So generative AI is definitely one of those technologies, making a huge difference, not just in financial services, but also in our personal lives, as we know. That's one point to remember when we talk about this. But in 2025, the technology is moving so fast that in 2025, the focus or attention is no longer generative AI, which it is, but it's now agentic AI, which is a form of generative AI that tries to put many different types of generative AI models, large language models, together to produce an outcome. So when it comes to generative AI, technologies that are moving fast, I think this is the sweet spot. Financial services themselves are looking at utilizing these technologies as quickly as possible in a safe and secure manner. And I think we can only see an upward trend for this technology to continue to increase in its capabilities, which is an example of what agentic AI can do. So generative AI could potentially solve tasks. Agentic AI can solve a number of tasks together, potentially stringing them together, making the technology more and more useful. So expect this technology to continue to evolve fast in the short term with more use cases coming to the fore.
Thank you. And maybe, Alan, I pass over to you. From a supervisory perspective, the MAS has really been at the forefront of the adoption of technologies and recognizing trends in the industry. How do you see the evolution and adoption of technology evolving in the financial services sector from your perspective?
Well, first of all, thank you very much for the opportunity to be with all of you here today. So there's a lot to unpack. So I'll just highlight a couple of key observations. I think what we are seeing over the last couple of years, and I like the way that you characterize it as an evolution rather than a revolution in that sense. I think what we are seeing is perhaps a continuum of efforts within the financial ecosystem to drive greater efficiency gains, whether it's true on the back office side or to get better in terms of delivering customer service on the front office. So I think we see that at a broad level. We see an unbundling of value chains as well. New partnerships being struck up between incumbents on the traditional finance side of things and also on the FinTech side of things. So I think we see that at a broad level. On the technology side, I think what's been emerging in the last couple of years very strongly would be, I think, a few fronts. One, I think on AI, to be honest, the conversation on AI is not new to many of us. I think it's been there. It's resurfaced, re-energized, and reinvigorated the last couple of years because of its development. But I think for a few of us who have been in the space, we have looked at seeing how it's progressed towards something that's maybe more deterministic, rule-based, to the point in which it's able to generate fresh content, and to the point in which it can actually function more autonomously. So I think that's one trajectory that we see. I'll just call out maybe just the other trend, which is around this notion of this push towards unbundling and decentralization of architecture and responsibility. I think we see that whether you're approaching it from a digital assets perspective, where we are seeing maybe new forms of market infrastructure being established between the different players, or in fact, the role, if you look at it from an AI perspective, that was mentioned earlier on, this idea of agentic AI, I think we are seeing that shift as well on roles and responsibility. Previously, you would have somebody that's both a human that acts as both a maker and a checker. We could be shifting to a point which a maker could be a co-pilot type or agent that does the initial draft, and somebody else would come in to do a verification. Or it could be the other way around if you're looking for anomalies, for example. So I think that's what we see the shift. Who exactly plays that role could be in-house, or could actually be outsourced some of the functions to an agent sitting outside of organization. I think those are maybe trends to pay attention to, and corresponding to that, I think we need to look at what are the new risks that emerges with the way that financial services is delivered. But I think we also mindful of the opportunities that it brings. So I think the ongoing, I guess, challenge and excitement that we have, whether it's from a central bank or regulator or from a policymaker perspective, is ready to look at how we can create an environment in which some of these responsible innovation can take place to capture both the opportunities and mitigate the risk.
Thank you, Anna. And I think there's a few things I would love to come back to, which is the point you said about fragmentation or various players coming into the value chain and its implications on outsourcing. And the other point is about AI agents, or what you call it nicely, co-pilots. So I think we come back to that in a moment. But before we do so, Mattias, obviously you've spent the last 5 years working on a fairly extensive program. Jakob already referred to the implementation of some parts of that. Maybe you want to say a little bit about what is your current agenda, what are you starting to think about, and what are you completing?
Thanks a lot, Nick, for that question, and good morning or good afternoon, everybody. Obviously, a broad question which is highly relevant. I think that what we've been doing in the last 5 years is to kind of try to cater for the transformation of finance that is currently ongoing by means of digitalization, and that has led us to look at some EU-specific items, like, for example, how does digitalization play out in the single market of 27 member states that we have? But it also means addressing upfront some of the consequences of digitalization. For example, we sometimes see new products or new asset classes being emerging. We have tried to address potential risks stemming from these. Case in point is crypto assets, for example. But we've also looked at some of the themes that you discuss here today. The fact that the new actors, well, not necessarily new, but technology is playing a bigger and bigger role. Financial entities and firms become more and more dependent upon technology, and hence it's important that they plan for the potential risks that may stem from that. So that led to DORA, that's been mentioned up front. And now, of course, the key item, I think, has been highlighted both by Prag and Alan, is of course artificial intelligence, which I think is also, from our perspective, very much at the forefront of our attention. It is clearly a general purpose technology compared to other technologies, which perhaps are a little bit more niche. Here is clearly a technology that has a very general potential across the economy as a whole, in finance in particular, but also for society and the economy at large. And that obviously will have consequences. And we are actively kind of assessing and monitoring the deployment of AI in finance. And there, I would like to echo very much what Alan just mentioned now. Evolution, perhaps not revolution, but at the same time, as mentioned by Prag, a clear acceleration of a trend of uptake. And also, of course, in light of the rapid innovation of the AI space, general purpose AI, etc., which increases the capability and also the ease of use of AI, and perhaps also the ease of deployment in the financial sector. So in that respect, that I would say is probably right now one of the key areas that we're focusing on. What are the trends? What do we see? What are the risks and opportunities? What does it entail for us in terms of regulation and supervision? Apart from that, of course, AI is probably the biggest one technology that we're looking at. But of course, there are other technologies out there which we've started to look at. I mentioned Mika and crypto before, of course, DLT more generally, and how that can be deployed in the financial sector, be it in traditional financial instruments as well, so asset tokenization and the like. So that I think is probably right now, apart from kind of implementing and monitoring and accompanying the implementation of the legislations that have been adopted, but also the kind of monitoring AI, the deployment of AI in finance and what it entails for us as regulators. And then also looking at some other things such as the continuous kind of evolution of digital assets and tokenization.
Yeah, it's interesting you mentioned the digital assets, because that was the big theme of this panel in Hong Kong when the SFC kindly hosted us last year. So it's interesting that that also remains highly on the agenda. Siddhartha, when we spoke, you started talking about AI agents and the emergence of AI agents. And it was mentioned already by Alan just a moment ago. So how do you see the phenomenon of AI agents in the financial services sector?
Thanks for that question, and thanks for having here. Good morning, good afternoon, everyone, and my best wishes to the panel members as well. When it comes to AI agents, I know generative AI has been one of the most sought after technology over the last 12 to 18 months. But as we see, as we start using generative AI, we also realize that the grounding of these general purpose AI to the context of the organization becomes all the more important, right? While we have a lot of general purpose foundation models like GPTs of the world, Gemini, and so on, but how do we actually ground them to solve some of the in-context problem for the organization? And that's where AI agent, in my view, is going to play a huge role. When we look at financial services, there are set processes, there are set standards, there are set regulations which govern how the financial services is going to operate. So there is a level of standardization across the industry. Now, this is where I think AI agents is going to really be useful, where we can actually model a particular problem to be an agentic problem and try and see how the agent can solve this problem for us and make the agent more reusable across similar kind of problems across the industry. For an organization to adopt the AI, or I would say agentic civilization, there are three key things that any financial services need to look at. One is in terms of the business and technology strategy, how to establish an agentic organization, have a vision, clear vision in terms of an agentic transformation. How are we going to move from a manual activity to an automated to an agentic? And that need to be laid out. And AI agents need to coexist along with humans, along with bankers, and along with the financial service agents. So how this operating model is going to work is going to be an interesting proposition, right? And how AI agents and human can coexist and work towards the same objective. And technology, of course, is going to play a foundational role in terms of what kind of architecture roadmap that we are going to have, what are the design principles that we need to have, what are the standards that we need to implement from a technology perspective, and finally, the agentic framework, tooling, and platform. The second key aspect is an appetite to experiment and scale, and that's pretty important. While there are going to be a lot of regulations around AI, but in my view, I think we need to experiment it a lot. We need to use it because when the rubber hits the road, we will know what are the advantages and the limitations of an agentic solution. Because at the moment, theoretically, sky is the limit. But when we actually implement it for our process, then we will definitely know in terms of what are some of the limitations that we are going to face when agents are actually deployed to a financial services process. Scaling becomes all the more important, especially from an aspect of, can we think of an AI agent to be a commodity within the financial services? And this would be an interesting proposition when we think of products like trade, when we think of product like markets. There is a lot of standardization at an industry level, and can an AI agent be a commodity which can be used across the bank so that the knowledge is kind of preserved, and also we can bring in a lot of level of standardization, monitoring, control, and so on. And finally, this gives a good segue to governance and the guardrails, where there has to be a level of oversight, and especially when you have agents communicating with each other without human oversight. What kind of guardrails are we going to have? What kind of runtime guardrails? What are the topical guardrails we're going to have? And what are some of the alerting mechanism that we are going to have either in real time or offline when agent goes rogue? I think all of these aspects are essential for a financial services to transform into an agentic civilization, in my view.
Thank you. And I think we come back to a few of the points you've raised in a bit more detail when it comes to the interaction between AI agents and human beings in a while. But Maria, maybe over to you. Both Mattias and Alan have already mentioned kind of the increasing complex relationship between financial institutions and IT providers. How do you see that market evolve from your perspective?
And good morning and good afternoon to everyone in Asia. And again, it's great to be here joining you all, and hope to see you in Asia next year. I think if you think about the origins of cloud, and let me make this point and to explain where I'm going. If you think about the benefits that cloud brought for firms of all sizes to be able to innovate, leverage best-in-class technology while remaining or enhancing their resiliency and security, I think the same principle can apply to AI and generative AI. The role of technology providers such as AWS is to actually democratize the access to these new technologies. And this is critically important when we are seeing businesses seeing AI as a critical technology for gaining or maintaining a competitive edge in the market. We're seeing businesses now seeing AI as strategic imperative, recognizing the potential for driving efficiencies and fostering innovation and unlocking growth opportunities. And the drivers that, in terms of trends, at the high level, the drivers for the continuous adoption of technology continue to remain this need that Siddhartha was just talking about to innovate, doing it fast, at scale, in an efficient way, in a sustainable way as well, while remaining secure and resilient. And I think that it's a fascinating thing to see use cases continue to evolve on a daily basis. And I think we're just at the very beginning of the adoption of this technology. So we'll have to see how this continues to evolve. But I think I wanted to quote two examples because I think it's fascinating what is happening in the market. NASDAQ, for example, is leveraging generative AI to tackle insider dealing, and they're being able to cut investigation time by 33% by using this technology. And in the surveillance space, for example, they're also using these tools to identify fraud and improve analyst efficiency and productivity. But again, we're very early stages of the adoption and the development of these new technologies, and we'll have to see in the coming years how they continue to evolve.
Yeah, and we come back to a few of those points also in a moment. But I like your reference to the use cases, and I would like to explore that in a moment. Maybe let's start and look at some of the specific risks and opportunities emerging from some of these new technologies. And Jutaro, maybe I can pass over to you because when we kind of spoke in preparation for this, you highlighted some of the concerns around the possibility of hallucination risks and what that might mean for retail investors engaging with artificial intelligence.
Yes, thank you, Nickolas. I'd like to express my sincere gratitude for having me in this important event. I represent Financial Services Agency, FSA, in various international working groups, including IOSCO's FinTech Task Force and OECD's Working Party on Financial Consumer Protection, Education, and Inclusion. Overall, I'm very optimistic about AI. AI has huge potential to provide great opportunities for exciting innovations. That said, there are also risks, so we must strike a good balance in between. Today, I'd like to highlight hallucination, which I find the most challenging of all. As you may know, hallucination is an inherent model risk of generative AI, which creates content that is plausible but not true at all. At present, the use of AI in retail services is still in its infancy. However, with the rapid development of large language model or LLM-based services, how to protect financial consumers from this new type of risk is a pressing issue. Financial services use cases require not only accuracy, but also a high level of transparency and explainability because client trust is their cornerstone. I understand that hallucination is fundamentally unavoidable as long as it only generates outputs from stochastic estimates according to the content of the preceding word or sentence. Although the risk can be mitigated by enhancing guardrailing techniques such as RAG, model fine-tuning, and prompt engineering. In my understanding, there are three features of hallucination. First, LLM's false responses are hard to detect as false because they are so decisive and convincing. When the retrieved data does not contain the information needed to answer the question, it is appropriate for the AI to respond, I don't know, or I'm not sure, as sincere humans do, but instead it generates an answer that is not based on the facts without reservation. In this respect, some people say, use AI as an assistant or a junior researcher. But I think LLM is more difficult to handle than previous AI models because it can find associations that even experienced specialists can't come up with, while at the same time producing complete misinformation. That's really confusing, isn't it? Second, financial institutions that use generative AI to reduce costs might have little positive incentive to practice so-called human in the loop. From an economic and business standpoint, it seems to make little sense to have the output thoroughly checked by experts in different areas such as finance, laws, accounting, etc., because spending such costs significantly offsets the benefits of using AI. Third, some developers of generative AI include in their terms of service that they are exempt from liability in the event of harm to users due to hallucination, and that consumers are assumed to be responsible for their own actions. I recognize that it is useful for retail investors to increase their financial and digital literacy, but it is extremely difficult for them to protect themselves given the nature of generative AI. With these challenges in mind, the specific case I'm most concerned about is a situation where hallucination causes harm to consumers in investment and asset management advice. However, I have similar concerns in other financial services operations, including bank loan approval and insurance rate calculation, especially when there is little or no possibility for consumers to choose another financial institution. In these cases, I'm not comfortable with AI-based service provision to retail customers, even if they are informed in advance, because accountability can hardly be fulfilled in such a way. Let me stop here. Thank you very much.
Thank you very much, Jutaro, for raising this important issue about false assumptions of underlying data driving the AI process. Maybe Prag, if I can come back to you, Maria talked about different use cases, and I'd be interested from your perspective how you see different use cases evolve on the one hand in Europe and on the other hand in Asia. Are we going in the same direction? Are we seeing certain divergences or different trends? And maybe before I pass over to you, there was one question that came in from Jay Chandran, which I thought was interesting, and you might be able to answer because I was not aware of this until I read the question, which relates to organoid intelligence, so biocomputing and linking it to brain organoids. I don't know whether you've got any views of that, but given you taught us that already generative AI is overtaken by new developments, this seems to take us even to another step. Over to you.
I'm not an expert in the field of brain organoids, but clearly it is the next evolution in this space. So today, I think the question is making a good general point, which is, we think the transformer-based models today, the large language models that we have that are doing such wonderful things, are probably the final architecture. We just need to scale these, and we continue to scale them, and we will, lead to artificial general intelligence. That could be the case. But there are also many other parallel areas of research, including these brain organoid sort of linking computers with organic matter as well, and others that can make a difference. So there are many different architectures. We are still in the infancy of the architecture-based approach, transformer-based approach to large language models. So that's the first point to make. But it's a good point because expect changes, not just in scaling laws, but expect changes in many different fields in this area, all heading towards the one space, which is more intelligent systems. So the question we need to ask ourselves is, what can we do when systems continue to become more intelligent? And all the panelists made similar points, which was, as these systems become more intelligent, we need to be conscious of the risks that are involved. We need to understand what use cases they work for and how can they become our co-workers and co-pilots. So that's one thing to put aside. In terms of use cases and the differences probably between Europe and Asia, firstly, all over the world, we're super excited about using this technology. Everybody wants to explore, everybody wants to deploy, and 2025 is the year that we want to start to show returns on this technology. If you're still exploring, you are starting to feel a little bit left behind. If you're still only doing proof of concepts, you're starting to feel a little bit left behind. 2025 is the year when generative AI applications should be deployed. They should start to scale across the organization, and you should start to see value. So that's one point to make. Now, in terms of use cases, I think there's equal enthusiasm for use cases across the board. And that applies to Europe, that applies to Asia. There's no differences in terms of that. So for example, we've released a number of tools globally that help within our organization. They help us to summarize documents. That's a universal ask globally. They help us to compare documents together to find the right information, a universal ask that every employee in the organization needs. We need to be able to translate into different languages. We're in 160 countries. That's a requirement we have. But the biggest use case that has really made the quickest impact is the use of generative AI for programming purposes with their developers. And why is that a really good use case? Because usually development happens in a very controlled environment. You have a development interface. You have a specific, strict set of rules you have to follow before you can take a piece of software and deploy that to production. This is exactly the kind of use cases that are ideal for this technology, given all the comments that everybody else has made here, which is there are still potential risks. I like Jutaro's comments on, there are many risks, hallucination being one. And he's pointing out that this is probably the first technology where it takes in a lot of data, sounds like it's right, but it's not. We have not come across that yet. And we have to evolve our business functions to accommodate for that. So in short, there are more similarities, the kind of use cases. Maria mentioned some of them, for example, in fraud or others, in programming and computing clearly. but anywhere where you have a lot of resources that are looking to summarize documents and spend a good bit of time do that. Summarize, I mean analyze, bring in key insights that are able to compare documents, really spend time comparing, pulling out key highlights, not just in documents, but on the internet or otherwise. All these tasks can now be reduced in time for an expert, the human in the loop again, to come in and pick it up. And that applies to programming. So I think there are more similarities than differences. But having said that, there are some differences depending on what each business or function is focused on. And there are differences when it comes to potential regulations and how, the EU AI Act is a big horizontal regulation. MAS is very, very active, as we know, really good guidelines that are regularly provided to steer the industry in the right direction. I'm involved in Project MindForge, which is a keystone project from MAS, which is fantastic. So other than those, the overall aim is the same. We want to use the technology safely so that our clients trust us and so that we can get the most benefit. It's all about benefits today as opposed to brand new products and services. And we can discuss that as well as we progress during the conversation.
Yeah, can I ask you one really, really small, short follow-up
sure.
question? Because ultimately AI, and I think Jutaro pointed that out, depends on the quality of the underlying data.
Yes.
And obviously in different regions, you might have access to bigger or smaller pools of data.
Good point.
Both personal data and non-personal data.
Yes.
Is that impacting the adoption of AI across different regions from your perspective?
It's a really good question, a good point. So the point you're making is, look, there is no AI without data. And that has become even more important in the generative AI space. You would have thought that, these models are trained on the internet, which means you don't need any of your data. You just, quiz them and you get the right answers, already on your way. That is true for many generic use cases. But actually the differentiating factor continues to be data. And to your point, the use cases that you're actually able to do at scale. So if you think at government levels, for example, at state levels, it is very much driven by the kind of data you're allowed to use for a particular use case. And their divergence can happen. The EU AI Act is very much focused on ensuring that the kind of data we use benefits individuals, benefits the environment, benefits the way we consume this technology, and which is also the case elsewhere. But there is a strong focus here specifically on that. And you're right, data drives every use case and the incremental benefit you're going to have over and above how your competitors use that technology. And just to finish that point, there's about 5 things you need, right? Data is clearly one of them. The cleaner the data, the better the data, the higher quality data, the better your outcome. In fact, recent research, I don't know if you're following, they were mentioning that, forget the $6 million large language model built by DeepSeek. University in the States was able to build a $6 model by fine-tuning the model with just $6 worth of data, worth of compute. And what they did was really filter down the data to the absolute minimum, highest quality data that they needed. And the model was doing phenomenally well. So data continues to be key. People continue to be key in implementing these projects. It's not easy to get everybody aligned and have a minimum level of knowledge about generative AI use cases. And we're trying to do that at scale. But the key point about people and generative AI, and like Jutaro and others were mentioning, it's not what the technology can do. We've all heard the hype. We know what it can do. The key focus is what it cannot do. The focus is on trying to get everyone on the same page as to what the technology lacks today, because that's how you get the best use case out of it. So people, processes are key. Your processes are unique to you. There is no one size fits all for this technology. So one organization is going to benefit completely different from this technology when compared to the next organization. It's very much depends on how you're set up. And that setup will drive this. So people, processes, technology, data, infrastructure, engineering and architecture are back on the fore. Infrastructure wasn't the biggest concern for a lot of organizations, but today, getting access to the right infrastructure to even do these use cases or to consume this data is back on the agenda of every senior leader in the organization. So not just data, people, process, technology, infrastructure, and architecture. And all of this drives use cases.
Thank you, Prag. I think I'd like to come to you, Alan, and then Mattias. I think what I take away from Prag's comment just now was that 2025 is the year of scaling. It's kind of no longer testing, it's kind of actually rolling it out. And we talk, and referring to technology in general and AI specifically, and we talked about the markets becoming more decentralized, or let's say value chains becoming more fragmented. We talked about AI pilots and agents. Alan, how do you see this from a supervisory perspective? Where do you see the challenges and where do you see the opportunities from your perspective? And then Mattias, maybe the same to you from a European perspective afterwards. Over to you, Alan.
Thanks. So I think Jutaro had mentioned earlier on in terms of the some of the risk regarding hallucination. I'll just add on to that a few other dimensions maybe to consider. One is in terms of the security dimension, both from the ability for bad actors to take and use that technology, whether it's for things like deepfakes, for example, malware developments, etc. That's one dimension. I think the other angle is actually around maybe things like prompt injection. So how can we intelligently create prompts to unintentionally reveal information around an organization, right? So I think that's something to maybe think about. Also, there's a question around things like data poisoning. For example, in terms of the models that are being used to actually train a specific model, I think there's influence on how that might look like as well. So I think that's certainly an area, if you look at operationalizing some of these aspects, I think important to keep in mind. Not to mention, I think some of the areas around fairness, ethics, accountability, and transparency, I think that applies across AI in general, right? So I think, but layer upon the specific aspects around generative AI, I think those are things to kind of watch out for. Not to mention, I think as we operationalize this, or organization operationalize this, then there's a question around the data that's being used to train a specific model. Does the party actually have access or rights to do so? I think it was discussed earlier. Are we talking about using internet data? Are we not talking about proprietary data? So then the case of sovereignty of the data, where is it residing, and so forth. So I think we need to watch out for that. And then once it's been derived, for example, then who's the custodian of that data? I think we need to kind of unpack and think through that. There's also, I think from our experience, there's certainly been an interest in terms of providing, let's say, data sets that people can use to train the models at an industry-wide level. Again, there are different thoughts to that. One is the accuracy of those data. How accurate is it, and is it really tested out in the field? And if it's really based on the actual data, historical data versus synthetic data, how do you make provisions for people to be able to access and share that information? And even if you do that, again, looking backwards, how good is it in predicting what's going forward? So I think those are things I think we really need to think very deeply about it. The biases that comes with it as well, because if we are talking about localization, again, some of the models will perform better in certain language scenarios, others may not perform so well in specific cultural situations. So I think we need to be mindful of that. Net, I think we need to watch out for some of the new emerging risks, but also I think we need to be also cognizant of some of the prevailing risks around cyber considerations around, again, I mentioned about biases and so forth. I think those still needs to be in place. So I talked a lot about maybe the risk and the areas of concern. I'll just end off maybe on a positive note. I think there's an opportunity for this to really maybe automate or improve the ways anomalies are detected, because in a maybe a more traditional sense, if you look at, I guess, human, everyone has their own biases, but I think actually having another autonomous agent, so to speak, provide another set of inputs, I think could be helpful in helping us to kind of filter off some of the noise that is existing perhaps in traditional systems that may be able to surface new risks at a scale that we may not have seen before. Now, how good is it? And what's the threshold that we can all be comfortable to kind of rely on it? I think that's something to really unpack, because if you are dealing with false positive on a regular basis, at let's say you get it at a success rate of 50%, would you use such a system? If it's 90%, maybe, but if it's less than that, what's the threshold in which you would say this is not a productive use of my time in either making a recommendation to a client or maybe using it to help in your investigation or your supervision activity. So I think those are things that I think we need to think about more deeply as we see some of these go into production with whereby the risk or the effects of actually having an AI model malfunctioning or misbehaving in the wild it's quite significant in terms of impact. So I think something that we really need to think about.
Despite all the concerns, I like your point about the autonomous agent as effectively a third person or virtual person in the room, kind of sense checking what we human beings do. It might be quite interesting. But Mattias, maybe over to you. You also mentioned earlier the benefits that it could bring to the single market, the use of technologies. But how do you see these challenges and opportunities from a European perspective?
I think first, in terms of the benefits, of course, as I mentioned before, there's a general kind of digitalization transformation unfolding, which has led, as we've discussed previously now, to the emergence of new actors that can bring a tremendous amount of efficiencies to the process. We have some of them on the panel here, the cloud service providers, there are others. And that enables financial firms to innovate, that enables more efficient value chains, that enables essentially better ways of organizing things. But it also brings certain complexities that is is not a novel thing in finance as such, but a kind of a constant where we always have to revisit the kind of perimeter of financial regulation to ensure that we have the overview that we need from a supervisor perspective of these longer value chains, that we have a grip on these actors that are there in a dialogue with these actors to ensure that everything works both in good times and in bad times. And that has been unfolding over decades in a sense, because this is not new as such, but I guess it's quicker and deeper now. And of course, with AI, there comes new kind of accents to that as well. And there, of course, as I mentioned, yes, perimeter of financial regulation and supervision. Do supervisors have the overview of these various actors who are there in the value chain, and do have an ability to engage with these? And people have been mentioning the AI Act. That's one way of perhaps addressing one challenge we've seen in financial regulation. But of course, as financial regulators, you have a certain type of overview, but there are clearly entities which are beyond, and rightly so, beyond your reach. But what we see then in the AI Act, given that is kind of a generally applicable framework, it also has enables financial regulators to rely a bit on the kind of engagements that the Commission will have with some of the upstream kind of developers of AI systems and the like. So there, I can see it as a kind of an evolution. But then, of course, we have broader forces at play. What I've said so far works when you have when you are able to engage with a traditional firm, in a sense, that provides the service in question, that provides the function in question. Of course, there are deeper forces at work. Nick, you mentioned decentralization. And if you take decentralization to its extreme, we see that also in DLTs, for example. There is, of course, decentralized finance as well, which would bring kind of additional challenges where, in a sense, you don't have an identifiable intermediary. How do you engage with that in that respect? So in that sense, yes, it's an ongoing conversation and discussion where, in a sense, the aim is really to kind of, from a kind of policy perspective, still be able to kind of tap the opportunities and benefits that come from technology, while ensuring that the kind of objectives underpinning financial regulation can still be upheld, and the kind of monitoring supervision can still be effective, also in this kind of more richer, but also more complex kind of organization or provision of financial services.
Thank you. I would like to, as we come towards the latter part of our panel, just zoom in on 3 issues that came up in greater detail. One is following up how to respond to hallucination risk, and I will start with you, Jutaro, and then how to deal with AI agents from a public policy perspective, Siddhartha. And then finally, I would like to come to you, Maria, because we haven't mentioned it explicitly yet, but well, we have actually. Dora was mentioned a few times, but there is this operational resilience framework that Europe has put in place and other parts of the world have put in place to deal with some of these challenges faced by third-party providers or technology providers. So maybe starting with you, Jutaro, how should public policymakers, regulators respond to the dangers of hallucination risk?
Thank you, Nickolas. You have raised a very important point. Although the FSA has not yet developed a regulation to address hallucination, the FSA is an integrated regulator and supervisor of all types of financial institutions, and we are responsible for financial stability, consumer protection, and market integrity. Therefore, we are discussing a wide range of possible policy measures, including the development of legislation and guidance, as well as the improvement of financial education. I think that there are 3 lines of defense against hallucination. The first is to prevent hallucinations from happening in the first place. In this regard, I expect AI developers to continue to advance guardrail technologies to reduce the model risk as much as possible. The second line of defense is to remove the hallucination when it occurs before it reaches the consumer. In this regard, I expect AI-based service providers, including financial institutions, to ensure that there is a sufficient level of human in the loop. Disciplinary industry self-regulation would also be effective. The third and final line of defense is to compensate consumers in the event of any financial damage to them which was caused by hallucination. In this regard, I have 2 possible ideas. The first is to prohibit contracts with retail customers that waive or limit the indemnification obligations of AI developers and AI-based service providers. I'd like to expect AI developers and service providers to actively participate in loss sharing and other remedies rather than absolving themselves of liability. Some may argue that citizens should better understand the risk of hallucination and that industry can help improve their financial and digital literacy through education efforts. I think that this may work for professional customers, but it makes little sense for ordinary citizens, given the difficulty of spotting the rise of generative AI. It is too much to expect retail consumers to have a level of literacy sufficient to protect themselves from hallucination. Part of the purpose of education is to promote the self-reliance that one should not trust advice of which reasoning cannot be explained when one makes important decisions such as investing or buying financial products. But the hallucination is so powerful that even the employees of financial institutions can be deceived, much more so with ordinary citizens. This is a fundamental difference from existing complex financial products such as structured bonds and derivatives. The second is the introduction and promotion of compensation funds and liability insurance. Even if it is difficult to prohibit or limit the exemption clause, I think there should be some safety net for compensation for retail consumers. Therefore, I wonder if it be an idea for insurance companies to consider providing general hallucination property insurance. Of course, there will be challenges, including how to eliminate fraudulent claims and how to ensure that such a product is profitable for insurers. So I'd like to discuss this matter with insurance companies and reinsurers. It would also be great if the industry could create a compensation fund to fulfill the fiduciary duty. So far, I may have sounded a bit negative, but basically, I have a positive view of AI, and I just wish AI would be used in a responsible way. Let me stop here. Thank you very much.
Thank you very much, Jutaro. The debate you've just raised is something we're seeing in Europe at the moment in the context of fraud and payments, actually. It's a very similar discussion, very interesting. Siddhartha, sorry, I always kind of put the R on the wrong side, so apologies for that. But coming to the AI agents, equally, where do you see some of the public policy responses?
So when we look at AI agents in specific, it is more an autonomous technology using AI. So my initial view is at the moment it's too early for us to even think of, okay, should we need to have a policy specific to AI agents? Some of the regulations that we have, some of the guidelines and the laws that we have around AI should be sufficient for AI agent. That's my initial perspective. Having said that, AI agents brings us a lot of new areas to think about. Since these are going to be autonomous agents, what's very important is what are the new risks that are emerging out of these AI agents in terms of how we use AI agents to solve some of the problems that we may have. So it is important where we actually apply our guardrails. What are the risks that the AI agent is going to bring new, which is not in existence today when we look at a traditional AI or a generative model? And the third one is how are we going to address it? Are we going to block them? Are we going to filter it out? Are we going to have human in loop so as we mitigate the risks of AI agent? And this is going to be an interesting proposition. So where it brings us a lot of new opportunity. When we look at guardrail, and I'm sure Jutaro spoke about hallucination and others spoke about hallucination as well. When it comes to AI agent, there are 5 areas where we might have to have guardrails. One is around the prompt. How do we validate the prompt? How do we sanitize the prompt? Because the agent are going to communicate with each other. Agent are going to communicate with customers. The second one is in terms of how do we validate the agent profile itself in terms of what kind of goals that the agents have been given to and how we align those goals to the business problem. And that becomes very important. These 2 areas will help us to prevent some of the frequently occurring cyber threat in terms of prompt injection, jailbreaking, and so on. The hallucination and topical guardrails becomes very important when 2 agents are communicating with each other and one agent's output goes as an input to another agent, where a hallucination might lead to an error propagation and sometimes accentuating the bias or the accentuating the errors. How do we validate these handoffs? And how do we ensure these handoffs are grounded so as we prevent some of the exploitation of such agentic behavior? And finally, in terms of the response, when the agent response is actually need to be given out, how do we actually validate and sanitize them? So from a monitoring perspective, agent monitoring is going to be no different to AI monitoring. However, there are a couple of areas where we might have to do some extended monitoring in terms of how do we perform agent diagnostics, because that's going to be a good research area. Because when 2 agents are communicating, how can we diagnose them? How can we have alerting mechanism? How can we have explainability, justifiability? And this becomes super interesting when we have agentic systems in agentic workflows. So by and large, if we look at the agentic landscape, at the moment, what is very useful for us to think about, or the opportunity is how these agents are going to be used for what kind of problems, and can we have some minimum set of guidelines or standards to start with, so as we help industry to accelerate the use of AI agent, and we observe and we gather lessons learned, and then see whether retrospect and see whether do we need an agent specific policy.
Thank you very much indeed, Siddhartha. This time I got it right. So really very interesting, and also I think the point you kind of how you bring the different elements together, the different types of risks, is very interesting. Maria, maybe over to you. We're seeing the final stages of the implementation of DORA. How do you see that concept of an framework for ICT operational resilience for important ICT providers like AWS and in a global context as well.
Thank you, Nick. And of course, we can't have a financial system adopting new technologies without it remaining resilient. So DORA and the efforts to come up with principles for operational resilience at the global level, it's a very important aspect of this. In terms of how we see DORA working, I think it's too early to say. As you know, the framework that applies to financial entities went live on the 17th of Jan, and it won't be the whole regulation won't be fully implemented until early next year when the oversight of critical third-party providers goes live. So I think it's a bit early to say. Having said that, I think 2025 will be an important year to see how the supervisory approaches to DORA develop. And I think, when you look at DORA, one of the important aspects of it, I believe, is that it remains technology agnostic. So it would be interesting to see how the supervisors approach that. And a framework that is technology agnostic, it's critical. And we see this reflected to a certain extent in the VIS principles, but it is critical so that it allows firms to continue adopting new technologies. But again, the supervisory approaches to this will be a critical factor. And I think in the context of DORA, as I said, 2025 will be a very important year. I said these many things in this forum. The need for regulatory dialogue and coordination among jurisdictions is crucial. Because as we all know, finance is global and technology is global. So increasing the dialogue and the coordination at the VIS level, at the FSB level, through other forums like IOSCO, it's imperative to ensure that global firms can continue to operate seamlessly, and that we as a technology provider can continue to enable the adoption of technology. So again, to sum up, I think the supervisory approach to DORA, we are yet to see how that plays out. Important that that regulators and supervisors are mindful about being technology agnostic. Another important aspect of it, and that's despite the fact that the regulatory objectives are the same, which are to have a more resilient and secure financial system. But I think we might need to think about different ways in how we approach the topics of security and resilience when technologies continue to evolve. So how supervisors approach this will be absolutely critical.
Thank you, Maria. And to finish, because I'm conscious of time, maybe just a 1-minute response each by Mattias and then by Alan. It's been mentioned that 2025 is a critical year of scaling up, of adoption, of implementation. What is your main priority for 2025? Mattias, maybe you first. Short response.
Is really to accompany that process of implementation, be it in DORA, as Maria mentioned, or be it in AI, where we have a kind of horizontal act being implemented gradually over time. But we also have other files. It's really kind of to continue to take stock of kind of experiences, both with what has been agreed in terms of legislation to ensure that it works in practice, take stock of first experiences and filter that into our reflections, but also then continue to kind of take stock of how the market develops, notably with continuous deployment of AI in finance, for example.
Thank you. And the same for you, Alan, from a Singapore perspective.
So what maybe I'll just share one specific area that we're looking at is just on the guardrail side of things. What are technical and process guardrails that could be standardized or put in place to help improve the safety using this technology.
That was short and sweet, and I think very profound and important. I think often standard setting is forgotten in the public policy debate, where regulation seems to always dominate the discussions. Thank you very much to all of you on this panel for your time, for your insights, for your knowledge. I found it extremely interesting.